Well, that was a bit of a crazy weekend in the investing world. You might have seen everything that just happened last week with Silicon Valley Bank over in the US, and things escalated very quickly. Now, just today, we've had some brand new information from the UK where HSBC has stepped in to buy the UK side of the bank for £1 whole, which secures £6.7 billion worth of deposits that are held by companies here in the UK. Now, the big question flying around here on YouTube and all over the financial press is, could this be the start of something bigger? Is your money safe in bank accounts, and what does this all mean for regular people like you and me? So from what we know, here's a very rough timeline. This all started because on the 8th of March, the bank announced they needed to raise some money. Not usually a good sign, I guess, is it, when your bank actually asks for some money? Anyway, this was because the bank had a growing hole on their balance sheet. So here's how I actually understand things. The bank took lots of deposits from lots of new companies who got their nice new money, mainly from 2020 and onwards, when we all know that money was pretty much being thrown around to any company in the tech sector who was going to grow and go to the moon. Interest rates were super low, so it was basically like giving away free money. And as well as that, the bank was also lending money to these companies, as well as the founders and people who work there too. This also looks like it was a condition to actually get your nice startup off the ground, that you had to use SVB. Anyway, I guess nothing wrong with that. That all sounds pretty fair. The issue starts then as the interest rates were being raised over in the US by the Federal Reserve. Now, on its own, this doesn't change anything. It's all because of what the banks actually do with your cash once it's actually sat there in your account. As most of us should already know, banks don't literally hold all of your cash and just wait for you to take it out when you like. They'll only ever hold part of it in cash, and then the rest they'll invest in the background, or they'll lend it out to others, ultimately to make some returns and keep themselves in business. Now, what it looks like SVB have done is that when they had all this money flooding in from the last couple of years, they've bought lots of US treasuries, aka bonds, and locked them in for 10 years. So all sounds very sensible, nothing out of the ordinary. This is what banks do. Now, the issues come up when over the past year, the interest rates keep on rising from the Federal Reserve, meaning that those 10-year treasuries start to lose more and more of their value because the rate that they were locked in at was mainly around 1.79%. So for every $1 million they had in these bonds, each year they'd get $17,900, but it's only paid at the end of that 10-year time period. So great if you don't need the money, but the problem is if you've got all of these tech companies pulling out more and more of their money and you need to make sure that you have enough cash to cover it, then you can see how you can run into some problems. So the only way to get more cash, you have to sell these treasuries, but they're not worth as much because right now you can go and buy the same 10-year treasury and get about 3.5%. So the best way I understand this is like saying you got yourself a nice new car, even a used one. You've paid $20,000 for it during the height of all this supply chain madness. Now all of a sudden you want to sell the car. Now let's assume you didn't even drive it. It's the exact same condition, no wear and tear at all. The problem is someone can now buy the one brand new for $18,000. So if you want to sell your car and get some cash, then you're going to have to sell it below that amount or otherwise hold on to it. Anyway, all of this mess triggered the run when word got out about their plan to fix this. So the bank's management were going to sell some of the bonds at a loss, invest in some better ones with higher interest rates, and then also sell lots of shares. So basically dilute a lot of people in the company and then just pretend everything was fine. So this then started the panic and this whole bank run issue where all of these founders and VCs who had all of their companies' cash in SVB started saying, right guys, get your money out right now and move it away. And you can imagine what some of the WhatsApp group conversations must have looked like. There's also some crazy stories on Twitter from company founders saying how they had everything they owned in the bank and they couldn't move money out and were worried about paying staff. Now, thankfully, this looks to have been sorted, but I'll touch on that in a minute. Now, as you can imagine, anytime people draw money out in a panic, the bank is forced to cover itself and get some cash quickly. But if all you can do is sell your assets for loads less than you bought them, then you become what is known in the industry as royally screwed. Now, I'm sure there's a technical term for it. Anyway, this gets us to the weekend where the authorities step in and take control of the bank, but then there's still loads of panic from other people worrying if this can happen to their money and what other banks might be in the same situation. You then had everyone saying, why won't the government step in and protect everyone because this isn't fair? And now you run into the other issue, like here in the UK, the authorities only protect your bank accounts up to a certain amount. So in the UK, it's £85,000, equivalent to roughly $100,000. But in the US, they've got protection up to $250,000. Now, that's fine when it comes to individuals, and most of us won't have anywhere near that amount of cash, but the issue here is that we're talking businesses with lots of cash parked in one place. So in a lot of cases, we're talking a few million to hundreds of millions because you need cash to run payroll, buy new equipment, as well as everything else you need to run a business. Now, if you're wondering who had cash there were some big names with some pretty big cash amounts. I'll pop them up on screen now, but you have Roku with a whopping $487 million with SVP, accounting for a quarter of their cash. Circle, the company that manages the USDC stablecoin in the cryptocurrency world, And then Roblox, the popular gaming company, had $150 million there. Although it sounds a lot of money and is a lot of money, it's not that significant when compared to the rest on their balance sheet. Now, the big issue is that lots of smaller companies had everything there. So before the weekend's latest news, the worry was that all of this money was just going to disappear and there'd be lots more people without a job come this week. Now, over the last 24 hours, things have definitely improved because it first looked like they were just happy to let this whole thing fail, but now it seems like everyone's changed their mind. So let me now pop up the headline from The Guardian and of course lots of other sources that Janet Yellen, the Treasury Secretary alongside Jerome Powell at the Fed and the Federal Deposit Insurance Corporation, the FDIC, announced on Sunday that depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. So, touch wood, this looks to have made everyone with money in the bank whole again, but any investors in the actual stock itself would of course lose their value, but that's a totally separate thing. Now, alongside that announcement, it wasn't just Silicon Valley Bank that had issues, they also said that Signature Bank, another smaller US bank, would also get protection, again for those depositors. Now, heading closer to home here in the UK, could this be the start of what's to come and further banks failing, just like in the financial crisis? Well, just this morning we saw an announcement at 7 AM that HSBC would be buying the UK arm of Silicon Valley Bank for the sum of just £1. Now, they probably would have got more on eBay, but that is another story entirely. It looks like the amount of UK deposits were around £6.7 billion, which is really small when compared to the US size, but it's still pretty substantial. Now, just for some perspective, the UK defence budget for next year is £32 billion, so this takeover is about a fifth of that entire budget. Now, bear in mind the announcement did say that no taxpayer money is affected here, so presumably this is going to come from somewhere else, but there's no magic money tree, so we'll have to find out the details later. So it looks like the UK has followed the lead of the US in protecting depositors, although it would have been very interesting to see if we would have done the same thing if they'd let it gone bust. Right now, as you can imagine, the UK needs all the investment they can get, especially from tech, and especially because the government needs any kinds of good news they can get. Isn't that right, Mr. Gary Lineker? So what about bank runs then? The issue seems to be that bank runs aren't just caused by the fundamentals of the banks itself. It's all about the panic and the speed at which people withdraw their money. It seems to me that no matter what bank you look at, if we all wanted our money at the same time, it just wouldn't be possible anyway because banks don't hold that amount of cash. So this means that even if a bank is really well protected and has lots of diverse investments and lots of good assets, if we all want our money at the same time, we'd all end up causing much bigger issues. So then here's the bit that I guess we all need to talk about, and then we say, at what point then do we just let these banks fail? If they always get bailed out and depositors get protected no matter what, then where is the incentive for the banks to look after your money and then do business carefully? You see, on one hand, you have everyone saying just let it fail, and then on the other hand, you say, well, everyone must be protected because it's not the depositor's fault. Now, I'm not your expert here, so my opinion doesn't really count for anything, but it's just a really interesting fine balance here, where you want there to be some kind of security and protection in place to make sure banks can't just throw your money away, but you also want a free market where the banks have to compete on a business level. And I can't think of many other types of business where you just get bailed out for doing things wrong. So could this be the start of something more sinister and a bank run? Well, I hope not, but it's all just going to be about keeping people calm and reassured. It's just like the run on toilet roll in the pandemic. Can you even believe that was a thing? Global pandemics are the first thing you need is toilet roll. You don't want to be caught with dirty underwear when you're on that Zoom call. That would just be the worst thing, right? Anyway, this is all a confidence thing, isn't it? If we trust the banks, then we keep our money there and everything's fine. If we don't trust them, then the whole system fails and we end up with serious repercussions. So watch this space, I think, is the only answer here. And let's see what the UK government have to say in the next few days as we head into the budget. On a quick side note on the story, it's crazy that just a few days before this happened, the insiders sold loads of their shares. If they get away with that and nothing comes of it, we truly are living in a crazy world. The CEO sold his options on March the 1st, just 12 days ago, netting more than $2 million of profit on the sale. Could just be a complete coincidence, but I sense there might be a bit more to this story than we find on the surface. Anyway, lesson here is to try and be as careful as you can. Nobody knows what's going to happen next. So stay diversified, look after yourself, and I guess from a personal note, just keep cash deposits under your protected limits wherever possible in the world that you are. What a big mess. Anyway, thanks for watching and happy investing.